European central banks are cutting the rates by 0.25%. Is this gonna help Bitcoin to reclaim this resistance and shoot towards $93,000? Or are the whales already preparing for a price destruction lower? You will find out in this video. Hello ladies and gentlemen, this is Samo from MyCryptoParadise. In this video we will go through multiple time frames, technical analysis on Bitcoin, but we will also dive deeper and we will take a look what is happening behind the scenes. So let me start with Bitcoin on a 4-hour time frame. Each candlestick represents a 4-hour trading activity, and what we can see that we have been able to reclaim this previously acting resistance, very important level. As you can see, this zone has been acting as a resistance right here. You can see the VIX right here, and if we take a look even further, it was previously acting as a support as well, and right now we have reclaimed this previously resistance into a support zone, which for us in Paradise Simple VIP meant a lower time frame shift in the market trend. That is why we have been looking since here for some buying opportunities, and we have used this beautiful wick out for our entry. As you can see, we have been strategically prepared for this, created a buy limit order at $64,600, and right now we have been just taking target free at the high at $68,000 for 5% on 25x leverage, save 129%. However, the things are changing right now. On a low time frame and medium time frame, we are starting to see a bearish signs again, which might even change our scalping approach. So first of all, take a look at this grind higher. Each new higher high was created by lower and lower volume. It is very clearly visible right here, and what is happening is that the bullish pressure is decreasing. We also got on our MACD indicator a bearish divergence. As you can see on the histogram, we are making lower highs, however the price is making higher highs. What does it mean? It's a strong classic bearish divergence. At the same time, as we are trading above this moving average orange line, we know there is multiple long position stop losses just below it. How do we know it? Because we are taking a look at the funding rates, and as you can see clearly yourself, it is extremely positive. It means that long positions are over leveraged, they are paying short positions, so some kind of a long squeeze below this moving average orange line is very likely to happen. And once we cross below this orange line, we get a retest of it on a lower time frame, an ultra low time frame, which is 15 minutes time frame for us. We get some double top confirmation. There will be a very big likelihood that we are gonna move back to our support zone right here at around $61,000 to $62,000. Right now we are still holding above it, but this is the reason why we have been taking target free right here at $68,000. We are in a dangerous levels right here, and because we also have this bearish cross on our MACD indicator for our medium time frame, we are being very careful with our lower time frame approach. Our swing trading approach is still bearish. Let me share you some confirmations why this is much more profitable to be bearish right now than bullish still. Let's dive deeper. Let's take a look at what's happening behind the scenes. You can see the price is clearly decreasing, as I have already showed you, but what's happening with open interest? It's decreasing as well, but still the funding rates are extremely high. How is it possible? Even the current funding rates are very high, as you can see, very positive. So loads of over leveraged long positions are still opened in the market, but the open interest is going down. That means contracts are being closed, however new contracts are not being made. By looking at all three data, price is decreasing, open interest is decreasing, but funding rates are high. It seems like there's still loads of long positions opened that are in loss right now, that been opened right here at this candle, at this right candle, and they are in a denial of closing their long positions. That is why the probabilities of having some long squeeze below this moving average is very high likely. That is why long positions right now, even on a lower time frame, are dangerous to hold. And after confirmation of switching this moving average into resistance, there is a higher probability that we will really go down to $62,000. So we are being very cautious right now. We need to play it smartly because most people aren't. Let's take a look at other exclusive data. Right now we are looking at a spot exchange Coinbase. We can see these sell walls. Can you see that? This is like billions and billions worth of sell walls right above us. So for the market makers to be pushing through it, well, there is a better potential to make money when going down from here, right? This is a tough resistance. And if we zoom in a little bit, we can see that on these candles right here at these highs, some smart money are distributing. It is visible when taking a look at the footprints of the candles, but also if we take a look at our order book suite, as you can see, with each new high, more and more sell limit orders are being filled. Who is providing them with the liquidity? Well, the over leverage traders, right, that are pushing the price higher on this open interest, on borrowed money basically. We can see also market buying on CVD index for the whole period of this move from $62,000, and that's allowing the big traders to sell. Because imagine that you are a market maker, you are handling billions of dollars, right? What do you care about? It's liquidity. That's all you care about, because without liquidity you cannot buy and sell. So as a market maker, you need to be creating with the price action and also around mass media and social media some kind of emotion. Why? Because emotion drives action, and action from retail equals liquidity, right? And on that liquidity, the market makers then can either distribute or accumulate without moving the price too much, right? Because if you don't have the liquidity and you want to sell or buy, you either crash the market or pump the market heavily and you will not make any money. And you know that in the previous video I have shared with you the Google Trends, right? And there is no new interest from the retail investors as we are near previous all-time high. So there is no liquidity and these market makers are still loaded, right? So there is a big risk that the market will crash after the liquidity vanishes right here at these levels where they already are distributing. Let's take a look at Bitcoin on our high time frame on daily. What is positive is that we have been able to close a daily candle above this resistance. That is great. However, does it mean that immediately this will shift into support? Not yet, right? So we need to be watching the price action on a lower time frames. Once we start building some base above this resistance zone right here, a new demand will start to flow into the market, and we will be watching that with our money flow analysis. We want to see dollar index to start going down, USDT dominance up, while Bitcoin dominance is staying stable. That will tell us, together with other confirmations, that new flow of money is entering into the markets. That will help to create from this resistance a demand zone. And yes, if that's gonna be the case, we will be able to start going to the upside towards our ultra high time frame target at $93,000 right here. But for that we have a tough work to do yet, right? And still on our higher time frame analysis there are bearish signs. One of them is this exaggerated bearish divergence. As you can see, the histogram on MACD indicator is making equal highs. That means that the momentum is decreasing, the bulls are weakening. You can also see that on the volume decreasing with every higher candle, and while the momentum is at equal high, the price is making higher high, but the bulls are weakening. Clearly the momentum is going away. So we want to see the momentum to start catching up. We want to see on a lower time frame start building the base above this resistance to be able to shift it into support, create demand here, money into the market, and then our approach in swing trading will turn from bearish into bullish, and we will be targeting that $93,000. At the same time, we want to see that on the weekly time frame. I've been discussing that in the previous video, exactly what we are waiting for before we can move higher. So we are just waiting on the confirmations, ladies and gentlemen. Paradisers, let's take a look at the last thing, which is liquidity. Right now you need to be very careful. You need to be playing it smartly. You need to be playing it with a great strategy. Monitor the things that most of the other traders are not even aware about, alright? So all of these other things than just pure technical analysis help us to be better than other people. And if you are better, if you have more insider informations, you can have more probabilities that will help you to make better trading decisions. One of them is watching the liquidity. You can see above us, same as below us, there is still some liquidity that can be taken off before moving downwards and squeezing the long positions, right? So for that, you need to be positioning yourself smartly, making sure that you are using this possible move towards liquidity for your own good. So then position yourselves on that wick, right? Have the stop loss above the liquidity pools where nobody else have stop losses, right? That will decrease the probability you will get stopped and things like this. When I, however, shift to 3-day time frame on that liquidity heat map, we can see that much more juicier it is below us, right? So if we start the long squeeze cascade lower, we will definitely have fuel for the market makers so they can make some great amount of money. So it will be profitable for them, but because you know there is also a great liquidity above us, trading without some proper trading strategy and system is very dangerous at these levels. So ladies and gentlemen, play it like a pro. I will keep you updated to make sure that you are ahead of everyone else. If you enjoying these videos, please smash the like button if you are getting some value from it. Subscribe and I will see you next time. Cheers.